Welcome to ReneEnergy.com on YouTube, the hub for all things renewable energy and sustainability. Our channel is dedicated to bringing you the latest innovations and insights in green energy, including cutting-edge developments like green hydrogen. Whether you're a sustainability veteran or just beginning your journey, we have something for everyone. Join us on this channel to explore inspiring projects for a sustainable tomorrow. We bring you the latest in renewable energy, sustainability, and cutting-edge technologies. And don't forget, for more in-depth information and resources, visit our website and subscribe to our newsletter for the latest updates and exclusive content. The fusion of artificial intelligence, AI, with green hydrogen production and supply chains is poised to upend global economic and geopolitical dynamics. In this episode, we'll explore how countries and companies can gain strategic advantages by leading in both technologies, how jobs and investment patterns will shift, and what new alliances and dependencies will form as hydrogen becomes a major trade commodity. By the end, you'll understand why mastering AI and green hydrogen could determine which nations dominate the clean energy era. First, let's consider the broad economic opportunities. According to the Hydrogen Council, green hydrogen could represent a $700 billion annual market by 2050, supporting up to 30 million jobs worldwide. Those jobs span R&D, electrolyzer design, AI modeling, manufacturing, electrolyzer stacks, fuel cells, operations, plant engineers, maintenance technicians, logistics, trucking, pipeline infrastructure, and end-use sectors, steelmaking, ammonia production, mobility. Meanwhile, the global AI market, projected to exceed $1 trillion in the next several years, continues creating roles for data scientists, machine learning engineers, and AI ethicists. The intersection of these two sectors gives rise to new high-value positions: AI energy modelers, hydrogen system data analysts, and smart grid architects. Consider the example of Australia. Blessed with abundant solar and wind resources, Australia has attracted more than 50 billion Australian dollars in planned green hydrogen investments. Projects like the 2 GW Asian Renewable Energy Hub, AREHA consortium of companies including Intercontinental Energy, aim to use onshore wind and solar in Western Australia to produce green hydrogen for export to Asia. AI's role is critical. Machine learning models forecast renewable generation, optimize electrolyzer dispatch, and manage salt cavern storage balancing. By 2030, Australia could export enough green hydrogen to replace a significant portion of Asia's coal imports, securing a major new revenue stream and shifting regional energy dependencies. In Europe, the European Commission's Green Deal and hydrogen strategy have spurred €470 billion in projected hydrogen investments by 2050. France's Total Energies, Netherlands' Gasunie, and Germany's Uniper are collaborating on cross-border pipelines, forming a European hydrogen backbone that spans from North Africa to Scandinavia. AI-driven platforms coordinate production schedules across these nations, matching supply with fluctuating industrial demand while complying with each country's regulatory frameworks. Because hydrogen's carbon intensity must be tracked and certified, under schemes like the EU's Certif High Standard, blockchain and AI combined will ensure transparent, auditable supply chains, giving buyers confidence in the product's greenness. Meanwhile, developing countries with lower labor costs but high renewable potential, such as Chile, Morocco, and Saudi Arabia, are positioning themselves as hydrogen exporters. Saudi Arabia's NEOM project, backed by Public Investment Fund (PIF), plans to install up to 4 gigawatts of electrolysis capacity powered by solar and wind. The goal: export green ammonia to global markets. AI systems will monitor and optimize NEOM's grid, ensuring electrolyzers run during off-peak hours and preserving desalinated water supply for electrolysis. If successful, Saudi Arabia can transition from being a petrostate to a green hydrogen powerhouse, diversifying its economy and reducing domestic carbon emissions. On the other side of the equation, demand hubs will jockey for stable hydrogen supplies. Heavy industrial regions, like the US Gulf Coast, northern Germany's Ruhr Valley, and China's Shandong province, require consistent hydrogen volumes. Securing offtake agreements with exporters will be crucial. For instance, Aramco, Saudi Aramco, and China's Sinopec have memorandums of understanding to import green ammonia, converting it back to hydrogen at Chinese refineries. AI platforms ensure that contracts are fulfilled by monitoring global supply chain conditions, vessel schedules, weather disruptions, and price arbitrage opportunities. All of these dynamics reshape global power balances. Historically, nations with abundant oil and gas reserves, Russia, Saudi Arabia, Iran, wielded outsized influence in energy markets. Today, As hydrogen displaces some fossil fuel demand, countries with optimal renewable resources gain geopolitical clout. Africa's blue banana, a metaphorical ribbon of high wind and solar potential stretching from Morocco to South Africa, could supply Europe with low-cost hydrogen via pipelines or shipping routes. Projects like Morocco's Noor Ouarzazate Solar Complex and South Africa's Renewable Hydrogen South Africa, RHODA, consortium exemplify how African nations aim to become critical players in the hydrogen economy. However, producing green hydrogen is just half the equation, the other half is AI. Countries that lead in AI can optimize every stage of hydrogen production, distribution, and trade, maintaining cost advantages and reducing supply chain risks. For example, Japan's strategic vision includes using AI to manage hydrogen demand across transportation, power generation, and industrial sectors, achieving 60% renewable penetration by 2040. Meanwhile, the U.S. National AI and Energy Consortium, established in 2024, focuses on deploying AI to stabilize grids and accelerate hydrogen electrolyzer innovation. The combination of U.S. AI prowess and domestic renewable resources can make the U.S. a competitive hydrogen producer, potentially rivaling Middle Eastern exporters. Investment patterns reflect this dual race. Venture capital poured a record $20 billion into AI startups in 2024, with a growing slice directed at AI for energy and resource optimization, sometimes labeled climate tech. Concurrently, global private equity investments in hydrogen infrastructure exceeded $50 billion last year, targeting everything from electrolyzer manufacturing plants to hydrogen trucks and refueling stations. Institutional investors, pension funds, sovereign wealth funds, are drawing lines between AI and hydrogen, betting that the intersection yields the most durable returns. As capital flows, new financial instruments emerge: green hydrogen bonds, AI-backed bond issuances, and hybrid certificates that link emissions reductions to model efficiency gains. These innovations further integrate finance, technology, and energy. Yet, with opportunity comes risk. Supply chain dependencies for critical materials, such as rare earth elements for AI hardware and precious metals for electrolyzer catalysts, can create geopolitical flashpoints. China currently controls over 70% of the world's rare earth production, essential for permanent magnets in wind turbines and GPUs in AI servers. If China restricts exports, AI hardware costs could skyrocket, stalling both AI training and hydrogen facility deployment. Similarly, approximately 75% of global platinum production occurs in South Africa and Russia, leaving the electrolyzer catalyst supply precarious. National strategies to diversify supply, investing in domestic mining, recycling, or alternative materials, are underway. For example, U.S. DOE programs fund research into non-precious metal catalysts. AI expedites this process by screening theoretical materials that can replace platinum in fuel cells and electrolyzers. Another risk is policy misalignment. Consider a scenario where Europe aggressively subsidizes hydrogen production, while the US and China focus on domestic carbon capture or nuclear. Divergent strategies can fragment global markets, leading to stranded assets and stranded jobs. International coordination mechanisms, like the International Partnership for Hydrogen and Fuel Cells in the Economy, IPHE, and the Clean Energy Ministerial's Hydrogen Initiative, aim to harmonize standards, but progress can be slow. AI can help regulators by modeling the global trade effects of different policy scenarios, predicting how U.S. tax credits for hydrogen production might shift investment flows from Europe to America, or how a carbon border adjustment mechanism could influence China's export strategy. These insights allow policymakers to refine regulations to balance competitiveness and sustainability. Resource nationalism also looms large. Countries with abundant renewables, such as Chile, Australia, and Morocco, may restrict hydrogen exports to preserve domestic supply for their own industries, echoing how some oil-producing nations once nationalized their reserves. AI-powered resource management platforms can assist governments in making data-driven decisions about export quotas, balancing domestic needs with revenue generation. For instance, a machine learning model could simulate outcomes under a 10% versus 20% export limit, projecting impacts on local electricity prices, employment, and greenhouse gas emissions. Countries that chart successful hydrogen plus AI strategies will need to cultivate interdisciplinary talent. Traditional energy engineers must learn data analytics, and AI researchers need a grounding in chemical engineering and thermodynamics. Universities are launching programs, such as MIT's AI for Energy Transition and TU Delft's Hydrogen Engineering and Digitalization Master's tracks, to address this skills gap. Corporations are forming partnerships with academic institutions to sponsor research in AI-oriented hydrogen projects, ensuring a pipeline of skilled graduates. So, what does this all mean for you, as a viewer? First, recognize that the AI hydrogen nexus is a cross-cutting opportunity. If you're an entrepreneur, consider launching startups at the intersection: AI-driven electrolyzer controls, digital platforms for hydrogen trading, or predictive maintenance services for hydrogen infrastructure. If you're an investor, keep an eye on companies that integrate AI into traditional energy businesses, utilities deploying AI to optimize hydrogen storage, or materials suppliers using AI to develop next-gen catalysts. If you're a policymaker or community leader, understand how AI and hydrogen investment can create high-paying jobs, enhance energy security, and support climate ambitions. In Episode 7, Carbon Footprints and Climate Impact, AI versus Hydrogen, will tackle environmental trade-offs head-on. We'll compare the life cycle emissions of training large AI models to producing green hydrogen and explore how the two can offset each other when integrated thoughtfully. You'll see how fueling data centers with green hydrogen can slash carbon footprints by as much as 90% compared to diesel backups, and how AI-optimized hydrogen production can further drive net negative innovations in industrial processes. Before we close, here's your quick action step. Map out your region's renewable resource potential: solar, wind, hydro, and overlay that with key hydrogen demand centers, refineries, steel mills, transportation corridors. Identify which renewable-rich regions are best positioned for large-scale green hydrogen projects. Then, consider partnerships with AI startups or research institutions that can help you build data pipelines and analytics tools to optimize production and logistics. Thank you for watching Episode 6 of Why Green Hydrogen is Critical in the Global AI Race. Don't forget to subscribe, click the notification bell, and leave a comment sharing which country or region you think will become the first true green hydrogen superpower. We'll be answering your questions and sharing additional insights throughout the series. Join us next time as we explore the climate impacts of AI and hydrogen and how their integration can deliver net zero, or even net negative, emissions. Until then, keep strategizing, stay collaborative, and remember, the new frontier of economic power lies at the crossroads of data and clean energy. Thanks for tuning into the ReneEnergy.com YouTube channel. We trust you found this episode enlightening and motivating. There's a world of innovation and opportunity in sustainable energy, and we're delighted to share this journey with you. Stay in the loop with the latest on renewable energy and sustainability by visiting our website and subscribing to our newsletter. Your support is immensely appreciated, it's truly invaluable to us. Don't miss our next video on new trends in renewable energy. Follow us on social media for the latest updates. Enjoyed the video? Like, subscribe, and share for more green insights. Thanks for watching.